All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you. And the first thing that I want to talk about is 100x scaling coming to Ethereum. Vitalik confirmed. So this is talking about the optimistic rollups layer 2 solution that's going to be coming pretty soon. It was scheduled for March 15th or so, but maybe it could take longer. Who knows? If the words of Ethereum co-founder Vitalik Buterin are anything to go by, then issues such as congestion on the Ethereum network may soon become a thing of the past, which we are working towards that in Ethereum. Right now, this is just going to be a layer 2 solution. Ethereum 2.0 is still quite a ways out there for even more transactions, but fair enough. During an interview with Naval Ravikant, I got nothing, on the Tim Ferriss podcast, the co-founder addressed some of the major bottlenecks plaguing the Ethereum network, whilst revealing that Optimism's Layer 2 solution would be released in the next few weeks. Buterin said that he sees the Ethereum network scaling by a factor of 100. So he says in the next few weeks, although I've read March 15th, which isn't too far from now, but eventually, somewhere in between there. Buterin shed some light on rollups as an interim scaling solution. The secondary solution provides a way to process and store transaction information on a designated sidechain before compiling transaction batches into Ethereum's mainnet. Rollups aim to alleviate the existing scalability issues on the network, which it currently faces, which led to network congestion and high fees. He remarked, rollups are coming very soon, and we're fully confident that by the time we need any more scaling of that, sharding will have already been ready for a long time by then. Away from the layer 2 solution to be introduced by rollups, sharding is a layer 1 solution. The sharding protocol will be released along with the Ethereum 2.0. and is designed to directly scale the network. But until then, Buterin claims that rollups are enough to increase the performance of Ethereum by 100-fold, which is it's a tough call at the moment. But I will have these links in the description below if you want to read this whole thing. It talks about how the optimistic rollups actually work. It's slightly heavy reading, but we're going to skip that for now. And we're going to go into the user experience. Any user that uses a dApp that is deployed to a layer 2 with an optimistic rollup construction can enjoy economic abstraction, e.g. fee-free transactions, pay with ERC20, etc., and quasi-instant transactions in the ballpark of 200 milliseconds. Don't blink or you'll miss it. So basically, this is a layer 2 situation. This is some layer 2 software that you would actually add to your contracts. And one of the first people that want to use this is Uniswap. So that's going to help quite a bit, particularly on the DeFi platforms. But mind you, this is not a hard fork, soft fork, anything like that. This is something that you would have to put on to your smart contract. So the pros and cons: flexibility and generalized computation. Increase in scalability, 200 to 2,000 transactions per second versus Ethereum's about 10 transactions per second, but I think it's a little higher than that. All data is available on-chain, no need to trust off-chain data providers, and a better user interface. Some cons are limited throughput when compared to some other layer 2 solutions, Plasma, ZK rollups, etc. And some additional security issues are raised and are discussed below. For optimistic rollups to work, we must assume that there exists an honest majority of Ethereum validators, miners in ETH 1.0 or stakers in ETH 2.0, and that there is at least one aggregator that is not censoring transactions. So a little bit of security problems, but it doesn't sound too particularly bad. So we'll have to see when these actually roll out, if they actually give 200 to 2,000 transactions per second, which would be super, super huge for DeFi platforms, because right now I think it's like $96 to make a Uniswap transaction, something like that, or 86. It's absolutely outrageous, and it spikes far above that. But to be fair, it also spikes far below that as well. But still, absolutely outrageous fees. Moving on to some different news. Bill to exempt crypto from securities laws has been reintroduced in Congress. So this is something like the third time The third time's a charm. So Representative Warren Davidson has reintroduced the Token Taxonomy Act, a bill that would make certain cryptocurrency tokens and other digital assets exempt from U.S. securities laws. This represents the third attempt by the Ohio congressman to get the House of Representatives to take up the issue. He introduced it in late 2018 at the end of a legislative session before reintroducing it with minor tweaks in 2019. The legislation has never been scheduled for a vote in the House, so apparently they just kind of are shooting this guy down. So H.R. 1628 would amend the Securities Act of 1933 and the Securities Exchange Act of 1934 to exclude digital tokens from the definition of a security. It would also make crypto-to-crypto transfers tax exempt and change the tax structure for cryptocurrencies held in an individual retirement account. So Congressman Darren Soto, one of the co-sponsors of the bipartisan bill, said it would add critical definition and jurisdiction to create certainty for a strong digital asset market in the United States. So this is actually would be really good. So basically XRP wouldn't be in hot water right now with the SEC. And probably many other cryptocurrencies, including American ICOs, because for the longest time, basically there was very few American ICOs, and the ones that were very few American ICOs ended up in trouble later on down the road and were end up sued or something like that, or fined or shut down by the SEC later on after the 2017-2018 hype sort of deal. And this is also why if you ever tried to buy an ICO as an American back in 2017 or 2018, you would go to the website and it would say not available to these certain countries, and the United States was always in them. So you had to use some clever ways around it, like a VPN or something like that. But for the most part, you couldn't buy it if you were an American, and if they had KYC, then you'd really get shut down, because then you'd have to basically verify your identity, unless you did some clever workaround of it, but still. So what's interesting about this too is if this law was passed, basically every corporation in America could make their own token or cryptocurrency without it being a security, because if something like Nike or any other major corporation decided to make a token like Nike token and decided to list it on an exchange, even though I don't even get what you would use the Nike coin for, but let's not be too too crazy here, because of course corporations are going to make tokens if they wanted to, or if they could. And basically, if they were exempt from the securities laws, they could just make any token they wanted to and just pump them out. And so I fear that this would actually be a good thing, and at the same time, it actually could be a bad thing, because the market would just get flooded with corporate coins, hoping that you buy them and that they go up in price and help their own stock and bottom line, when you're really just buying something that just says Nike coin for basically no reason. So it could be a good thing and it could be a bad thing. I think more so a good thing, because the United States crypto securities laws are way too strict, and basically America is for sure falling behind in the cryptocurrency world. So moving on here, Beeple NFT artwork sells for $69.3 million in Christie's auction. So crypto artist Beeple, real name Mike Winkleman, has sold an NFT collection of digital artwork for $69.3 million at Christie's auction house, breaking records in the digital art world. So I am way too much of a boomer at this point to understand NFTs. I get what an NFT is. Don't get me wrong. It's not particularly hard to understand. But then again, I don't get it. It's like all these kids and their newfangled kicks and their Dan Fogelberg music and their hula hoops, And basically, I have no idea why people buy these. It's just a picture, a JPEG on the blockchain that you pay $69 million for. In fact, one was a Banksy painting that they literally set on fire. They burned it. They completely destroyed the Banksy painting. But before they did that, they made it into an NFT so that it would only be an NFT and never actually have the real painting, which I get, but why wouldn't you just keep the real painting and not do an NFT? It doesn't make any sense. And so this right now is the hot thing, NFTs, super hot NFT art. But Will it collapse in the future, or will it be even bigger? Likely, probably even bigger, but I still don't get it. Why? Because if you take an art painting, there's only one of them in the world anyway. So, either way, while the winning final bid was $60.3 million, the realized price, which includes fees, totals $69.3 million. So you telling me there was $9 million in fees? Unbelievable. Who has the money for this? Beeple's every day, the first 5,000 days, takes the form of a non-fungible token, a unique digital asset that provides verifiable ownership of digital items such as art or in-game items, which again is pretty cool. But I think the prices on these are absolutely outrageous. People are selling their tweets for thousands of dollars. They are typically held on the Ethereum blockchain, although other blockchains such as Flow also support NFTs. The artwork itself is described as an accumulative piece highlighting the artist's journey, creating art over the past 13 years. It features the image below, which is an amalgamation of thousands of images. It contains 10 pieces of art, each populated by Beeple's creative mix of iconic characters, for $69 million. One of the most expensive art pieces ever sold. There were 353 bids in total for this artwork, with bidding reaching $1 million in the first 3 hours. It's the third most expensive artwork sold by a living artist, number 4 when adjusted for inflation. So the third most expensive artwork ever sold by a living artist. So one of the most expensive in the world, basically. So moving on here to another NFT, and this one makes me feel like a boomer even more than the previous one. Bad Luck Brian meme goes crypto art. NFT sells for $36,000. What? So here's the thing. This is why I don't get it. I'm too much of a boomer at this point to even get NFT art. Basically, this image is all over the internet. You could just Google it. So who is the owner of this? Just because it's on a blockchain, you own just the piece on the blockchain, but everybody can access this picture. So it doesn't really make sense to me. But fair enough. Bad Luck Brian, an artifact from the halcyon days of top text, bottom text, impact, font, image, macros, has returned in NFT form earlier this week. It sold for $36,000 because crypto. It's part of a slate of auctions on the NFT Marketplace Foundation, organized by the digital artist Chris Torres. Torres is responsible for Neon Cat, which is a cat with a Pop-Tart for a torso. Last month, he turned it into an NFT and it sold for over $500,000. Totally. So basically at this point, I should give up crypto YouTubing and just take every image off the internet and make it into an NFT. Is that basically what this article is telling me? I probably shouldn't have said that. Now all my viewers are going to do that. But basically, yes, you should just take every image off the internet and turn it into an NFT and then hope it sells for $36,000 or maybe $500,000 or maybe $69 million, whatever, right? What's the pricing matter on this? It don't matter. Just set a price, right? I'll just take a picture of my own face, turn it into an NFT. You got your Sotko NFT, period. Why not? Other early 2010 memes in the campaign include Keyboard Cat and Scumbag Steve. So basically just some random NFTs that you can buy for, I don't know, $500,000, because why not? So interesting. NFTs. Welcome to the world. So I actually like the quote from Chico Crypto. Chico Crypto made a video I don't know, maybe it was a few days ago, maybe it was last week, I'm not sure. But in that video, he said that he doesn't buy NFTs. He's not into NFTs, particularly art, but he does like the underlying technology of it and buys the underlying technology of it and the blockchains that actually hold the NFTs themselves. And you know what? I'm going to have to go ahead and agree with that. I don't really care for art that much, except for these real noise curtains. Look at that upgrade, boys. But I don't really care for art too much, but the underlying technology, pretty good. So moving on here, Goldbug Peter Schiff threatens to disinherit his son over his 100% BTC portfolio. So Peter Schiff, the CEO of Euro Pacific Capital and one of Bitcoin's most popular critics, has recently threatened to disinherit his son, Spencer Schiff, for leaning on Bitcoin with his entire weight. Schiff lamented in a tweet that his son, Spencer, had converted his entire silver stock to just to increase his Bitcoin holding. The young investor currently has all of his investments in Bitcoin. Good for you, Spencer. I don't know, maybe you should diversify just a little bit. But fair enough, Spencer. You do you. Peter Schiff, my son, Spencer Schiff, went all in on Bitcoin on the last drop below 50K. 100% of his portfolio is now in Bitcoin. He sold the last of his silver stocks to raise the cash. If my own son is this brainwashed, imagine how vulnerable most kids are. He's hodling to infinity or bust. Spencer Schiff would soon turn 19, had in the past spilled on his Twitter page that he already had $450 worth of Bitcoin through his portfolio, which was in the past, so that's not too much. But after selling his silver stock, it's probably a lot more. The latest event is an added indication that young investors seem to be more attuned to holding the digital gold as opposed to his father. Being a strong Bitcoin critic, Schiff finds it very hard to believe that his son made the conversion in the right frame of mind, alleging that the young man was brainwashed. He also noted that his son currently has no plans of letting go of Bitcoin anytime soon, saying he's hodling to infinity or bust. Responding to Schiff's ranting tweet over his son's Bitcoin holdings, popular Bitcoin proponent Anthony Popliano noted it is a good development that one of the Schiffs is trying to increase the family's wealth away from traditional gold. So always good stuff. I get the feeling that Peter Schiff, maybe he truly doesn't like Bitcoin, but I get the feeling that he just tweets against Bitcoin just for the popularity, because anytime he tweets something against Bitcoin, it gets retweeted, thousands of times, tens of thousands of likes and things like that. So I think he just likes the attention, to be totally fair. While he may not like Bitcoin or the idea of Bitcoin, he may be a truly against it, but I think he just tweets just for the attention, to be totally fair, which, he's not the only one. So moving on, what Biden's $2 trillion stimulus package means for Bitcoin. So President Joe Biden has today signed into law the ambitious American Rescue Plan, a nearly $2 trillion stimulus package following approval from the House yesterday. The bill represents one of the biggest government interventions into the American economy since World War II. It doesn't quite hit the $2.2 trillion heights from March 2020's pandemic response package, but it's still more than $787 billion support package issued in the wake of the 2008 financial crisis. So we believe there's a good chance that at least some of this money will find its way to the flagship cryptocurrency, or perhaps even other altcoins. One of the major reasons for this line of thinking is Bitcoin's appeal as a hedge against inflation. The decline in the value of the US dollar has been good for Bitcoin's investment case as digital gold, an asset that can't be devalued by government stepping in to print more of it. And since the stimulus package was passed by the Senate on Saturday, Bitcoin's price has risen again, crossing the 55,000 threshold. So once they actually realized that they were signing it and the stimulus package was probably going through, the prices of the stock market and, of course, cryptocurrencies are starting to rise, particularly Bitcoin. To be sure, it isn't clear whether Bitcoin's recent price bump directly correlates with the U.S. stimulus package. I would say that it is, but again, it's not set in stone there. And the question of correlation between Bitcoin's price moves and macroeconomic events remains up for debate. If you ask Ingo Fiedler, co-founder of the Blockchain Research Lab, the short-term increase in Bitcoin may have been a small speculative reaction to the stimulus package, but Bitcoin has already been on the rise recently, accelerating during the COVID-19 pandemic, and it may be set for another influx of new investments. So the idea here is that, since the stimulus package was almost certainly going to be passed, and this was a couple days ago, it hasn't been passed till today, but it was very likely because the House passed it, it moved on to the Senate. The Senate made a small change and they passed it, and because of that small change, it had to go back to the House. The House passed it, it was either today or yesterday, and it got to Biden's desk, the executive branch, the president, and he signed that today. But a couple days before that, it was almost certain that it was going to go through, and therefore markets typically move up. Why? Because the money hasn't hit yet. Of course, people are going to buy in with what money they have first, because they realize that everybody's going to buy in once they get their money, so of course they want to be first. But moving on from that, you'd have over $10,000 if you bought Bitcoin with your stimulus check. So the $1,200 stimulus check, the statistic is based on a $1,200 Bitcoin purchase on April 15th, 2020. So that $1,200 stimulus check is now $10,211. In fact, it's a little bit higher with, I believe Chainlink is a little bit higher. Also, Ethereum is a little bit higher. You could probably argue that Dogecoin is significantly higher as well, because Dogecoin was like under a cent before it was pumped. So, but not many people were putting $1,200 into Dogecoin. So I think looking at every altcoin to see which had the higher gains is probably not the best practice here. But just to say, I mean, $1,200 in a year, turning $1,200 in 1 year to $10,211 under a year is no joke at all. And also, Coinbase noted that $1,200 deposits increased by a few $100% when that $1,200 came out as well. And they also have a click here for the $1,200 stimulus, or the $600 stimulus, which isn't nearly as much because that came out in January when Bitcoin was at a pretty reasonable price. So it's not as much, but it's still pretty significant as well. So I know what I'm doing with my $1,400. Moving on here, $1.739 trillion market cap. Bitcoin still over that $1 trillion market cap. 57,000. Bitcoin is now on the precipice of beating Google and Apple's market cap by themselves. I believe it's now bigger than the South Korean won as well. So over $1 trillion market cap for Bitcoin. In just a little bit more, and it'll be bigger than Apple or Google's market cap, which is pretty impressive to say the least. So 57,000 Bitcoin, 1,818. Ethereum still lagging behind a little bit. It was around this time when Ethereum... When Bitcoin was about 58,000, when Ethereum was 2,000. So we are lagging on Ethereum by a couple $100, but that makes sense because the DeFi fees are so insane right now. I think a lot of people are putting their money, have taken some of the money away from Ethereum, and they put it into Cardano when it was pumping and other coins like that. So that isn't actually particularly surprising. But by the end of the year, I don't think it would be... I don't think it would be too much of a stretch to think of close, if not over $3,000 Ethereum, particularly once layer 2 solutions hit something like Uniswap with huge volume like that. If that's possible and that occurs and transactions go up 100-fold, then people will actually be able to go on there and use it. The average retail user, it's not like anybody can't just go on to Uniswap now and do it. But if you want to pay the $96 or $80 in fees per transaction, then all the power to you. Right now, DeFi is in an unusable spot for a lot of people, and it's not the fact that a lot of people only have $100 or $200 in Ethereum. There's plenty of people with tons of Ethereum, but they don't like the unbelievable fees. And it's not even just the fees right now. It's also the fact that people could pay ridiculously higher amounts in custom amounts of gas in order to get their transactions through before you. And that's always been a thing. But if fees on something like Uniswap are already $80, and then the people that are paying $300 fees are going to get in before you, then it creates this level of competition that's all about money. And you could argue that that's what the world already is anyway. But I think it's getting a little bit egregious. People thought that Bitcoin fees were pretty bad in near December 2017. Ethereum fees have shown it, hold my drink, and decided to show Bitcoin who's boss in that sense. But that's all I have for you guys. Make sure you like, subscribe, share the video. That helps me out a lot. My social media in the description below. Give me a follow on those if you get the opportunity to do so. And as usual, I will see you guys next time.